I just want to make a short video on what I think is probably the biggest mistake I see people making in relation to their taxes on their investments in Ireland. And it's quite a simple one that could actually cost you a lot if you're not aware of it. Let's just go through a common scenario. Let's say you start investing with 10k, you buy a couple of stocks. After a couple of months, things don't go your way, and now you have lost 3k of that 10k investment. You're down to 7k. You decide that investing is not for you, and you actually go ahead and sell those investments at a loss of 3k. The problem is that this is the end for most people. They just completely forget about making this loss and they keep no record of it. But did you know that these losses basically become like an asset for you and you can carry forward them indefinitely? So if we continue on with our example, the person made a 3k loss and that can save him 1k of tax in the future, so 33% of his loss. That's because this 3k can be offset against any future profits that he makes. So it's going to save him 1k of tax in the future, 33% of his 3k loss. And the good thing is that this loss is not ring fenced. It can be offset against the profit that you make on the sale of a property, for example. If you are investing for quite a while, it's not uncommon that you're going to come across some situation where you're going to have to sell some investment at a loss. So you need to be aware of this. Then, when it comes to doing your capital gains tax returns, what is the story there? Well, I only learned this yesterday from somebody who actually commented on one of my TikToks, so it's fairly new to me as well. There's actually no requirement for you to do a capital gains tax return when you make a loss in the same tax year as that loss. You can just avoid doing it and then wait until you have a tax year where you have made a chargeable gain for which this loss can be offset, and at that time you can include it on your capital gains tax return. You can obviously still go ahead and do a capital gains tax return when you do make a loss. It might make it even easier for you to keep track of things because if it goes on a couple of years, it's hard to keep a good record of your losses. If the revenue ever come calling and want some backup to your documentation, um, it probably is easier if you had done the capital gains tax return in the year that you actually made the loss, not to be having to go back a couple of years looking for old documentation. So that was just a short and topical one that I wanted to cover at the moment. I'm sure there's plenty of people who've made a bit of a loss on crypto, and that loss can then be carried forward against any profits that you make on, say, future investments in stocks or any real estate or anything like that. So don't forget to actually keep proper record of them and carry them forward.